universe, media, network, 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 network.
If you're listening to this, there's a good chance you work within the real estate investing industry. There's another good chance that you would like to increase the sales of your products or services. Well, you're in the right place. United States Real Estate Investor is a platform you need to place your brand directly in front of your target audience. With our focused, growing audience of real estate investing beginners, enthusiasts, and seasoned professionals, you can continually reach our captivated viewers and listeners with ease. To learn more or to get started today, just visit UnitedStatesRealEstateInvestor.com/advertising. That's UnitedStatesRealEstateInvestor.com/advertising. Get ready to increase your brand awareness and your bottom line. Attract clients with content.
Hey, welcome to This Month in Real Estate Investing, where we separate the news from the noise. I'm your host, James Brown, and I show people how they can make safe, secure returns through our pre-vetted passive investments. Feel free to join our private investor club so you can get exclusive opportunity alerts. We don't advertise some of these to the general public, so feel free to join. Just go to legacywealthcollective.com, and you may need to add the WW at the beginning to get in there. But anyway, in this episode of This Month in Real Estate Investing, we'll be breaking down a variety of real estate investing news items, including Vance owns shares that sells to foreign investors, post-hurricane Florida residents say we're done, and Floyd Mayweather closes a $402 million New York City real estate deal. Don't forget, if you're watching live on YouTube or Facebook, you can share your thoughts and questions during the show. All this and more on this episode. Let's start the show. All right, our guests today are Keshav Kalur, Kevin Amalsh, back for a second time, and RJ DeLeon. I guess that's how you say it. You can correct me.
DeLeon.
I screwed that one up. All right, in that order, why don't you guys introduce yourselves, brief introduction, kind of share your background and what types of investing you guys focus on.
Sure thing. Yeah. Hey, everyone. My name is Keshav Kalur. I'm a partner at a ground-up build-to-rent development firm, Legacy Acquisitions. We're fired single-family rental homes under development in Louisiana and Alabama. And I also run a fund where I recognize I don't want all of my money in just build-to-rent, nor the same for my investors. So in that fund, I help my investors passively build a diversified private equity portfolio across apartment buildings, oil and gas investments, private lending, industrial real estate, and so much more. And the goal there is to have 10, 20, 30 investments paying you, whether you're working, traveling, spending time with family, whatever it is, so that you can achieve generational wealth, passive income, all the reasons that we're in real estate and investing for.
Fantastic.
Well, I think I'm up next. That was a great intro. I don't know if I'm going to be able to follow that one. Jeez.
Smooth.
Yeah, my name is Kevin Amalsh, the founder of Pine Financial Group. Pine Financial is based in the Denver area. We're a private money lender. So we bring in private capital. So we talk about passive investing in real estate. This is all on the debt side. So very first in the capital stack. That's typically the safest place to be investing. And which creates some liquidity. So very different than some of the syndications and that kind of thing. We use that money to loan to real estate developers. So we're sort of on both sides, helping passive and active investors. So think about your fix and flips or your repositioning of real assets. We're involved in all of that. I'm happy to be on the show, man. It's good to see you again.
Heck yeah. RJ.
Hey, my name's RJ DeLeon. I'm the founder of NVR Capital, NVR Capital Club, a mentorship real estate platform, and Chicago's most active real estate investing meetup group, the Chicago Multifamily Club. I'm also a general contractor. Currently, with NVR Capital, we raise capital both as equity and debt. Currently, we're building single-family homes, and the construction company mainly helps with multifamily investment properties on the residential side. I'm here for mentorship consulting, and I'm a construction expert. So,
Fantastic. All right, thanks guys for being here today. Let's dive into the news from Reuters. U.S. office real estate market shows signs of bottoming after big discount sales. I think we've all seen this unfolding over, it's been a while since it's taken a dive, right?
Yeah, James, I was just in a conference yesterday with a bunch of institutional investors. So thinking about your pension funds, your family offices, that kind of thing. And real estate came up on one of the panels. Actually, I was sitting on that panel, but office did come up quite a bit. So there's a lot of fear still. I agree with this article. I think it probably has bottomed out, especially when you have someone as big as Amazon coming out and saying, hey, we're back to work 5 days a week. Like, I think the work from home has sort of run its course, and office is going to be the sector that benefits the most. But based on what I heard yesterday, there is still some fear here.
Yeah. It's people taking some huge hits. So everybody's.
I was actually just speaking to a private equity peer of mine, and they were talking about how since the market is so low, they're starting to pick up all those office spaces because they do project in the future that office is going to come back to life because all the difficulties of remote workers. So I do know a few big players out there that are actually positive on the outlook of office space and are getting in now while the prices are a bit lower.
Mm-hmm.
Yeah, RJ, are you seeing that in the core, urban core, or suburban? It seems to be there's a pretty big difference there. What are you seeing?
So I actually don't operate in office or retail very much. I do know their strategy is surrounding suburbs, not core in the city. I do have a partner, and I am partnered in a it's a skyscraper remodel. Essentially, we purchased a 40-story skyscraper, and that's being converted to approximately, I believe, 400 unit residential, and that's downtown Chicago. It's Pittsfield building.
I know that I had someone on my podcast investing for Generation probably in the last month or two, and he actually specializes in suburban office, and he said that market, never took a pause, and that it's been doing well, and that was really downtown office that took a hit during COVID and with the issues, and that surprised me because before that podcast, I would have stayed a 10-foot pole away from anything that had the word office in it. So I think it's just another reminder that real estate is local, and you can't cover an entire market or even asset class with just like office buildings are going down.
Yeah, I actually just purchased a suburban office in Littleton, so James knows the area, about 24,000 feet. And I can tell you that it did soften. And I don't think it's because of the work from home. I think it's more about the interest rates, because these buildings trade on caps, and when you have interest rates going up, the cost of capital goes up. And it hit hard. It didn't hit multifamily. I know sounds like both of you guys are in the multifamily space. It didn't hit that as hard for some strange reason, but it did hit office even in the suburban. So, I mean, they're cash flowing, but the cap rates are higher. Like what might have traded at a 5 is now between a 7 and an 8. And that's, I mean, obviously local, but in our local area, that's what we're seeing.
Another thing with offices, we've talked about it on this show, people converting them into other uses. There's challenges to it, but also opportunities. So,
yeah, we're still not seeing that. I know we talked about that before, James. Are you seeing that? I mean, it seems like it's more expensive to convert than to just start over.
Yeah. There's so many challenges with the infrastructure, especially if, like, you could turn stuff into like light industrial, but you have to have a solid floor and high ceilings and access for trucks. Well, a lot of offices are in like little parks or downtown areas, so that's a challenge. And then turning them into residences, you gotta like replumb the whole thing to add enough bathrooms and just all that kind of stuff.
Well, the egress and ingress, right? I mean, it's the way they're designed doesn't support that.
Yeah. I haven't talked to anybody that's actually done it.
Me neither.
Yeah, so that's a good question and comment. So.
Except for RJ's got one.
We're in the process. So I'm actually an LP investor. That was a convertible debt note with a cap. I'm very good friends with the owner who purchased the building. I believe it went to receivership, and he just purchased another mid-rise downtown Chicago. So my sentiment is major metropolitan. You can't do anything else other than convert unless you're doing full-on demo.
Yeah, you're probably right. Well, you should catch us up as that progresses, how that goes.
For sure.
Yeah, that'd be interesting. And Keshav, I want to hear more about the build to rent. We had somebody come here to Denver. They've done multiple build to rent, single family style. Anyway, it intrigues me. We actually, I think we're going to raise some money for one coming up here.
Yeah, it's a great concept, and we love it for a lot of reasons. I think primarily, as I'm sure some of the news that we're going to discuss, home ownership has been for some time and continues to just become increasingly unaffordable for the average, American, unfortunately. And there's that delta between renting and buying just keeps growing.
Babe,
especially in some parts
you might want to turn off your camera.
We could hear you, RJ.
Oh, I'm sorry.
All good.
Yeah, especially in some parts of the country where insurance is just climbing up and up and up. Like with all these hurricanes and storms coming through, if you can't afford homeowners insurance, and with just where interest rates are too, it's becoming increasingly difficult. Yeah. And people thought that interest rates going up would mean that housing prices come down significantly, but I think we've seen that overall in the country there hasn't been the big spike down that some people imagined. I know obviously some markets that were overbuilt, Austin and Phoenix, there's some price correction that we're seeing. But everything else, home prices just continue on that upward tear. When that's the case, and you have to rent where you live, if you have the option of living in a single family home where you have your own backyard, your own driveway, your own privacy, or an apartment complex where you have neighbors on all four sides of you, left, right, up, down, then people would go the build to rent route. I know when I was growing up, we lived in a lot of apartments, and we got kicked out of a few actually because I was so I would just run around, jump, yell, and the neighbors around us would complain. But in a built home, that's not necessary because you don't have neighbors that you're sharing walls with.
Yeah.
And beyond that, institutions just love it because it's a new product. You get the feel of living in a single family home for the price of living in an apartment. It's kind of the best of both worlds in the situation that we're in, that ownership is in.
Yeah. The build to rent, initially I was like so against it because like I'm in the rent to own space. I want to get people into home ownership, but the reality is there's a lot of people that won't And like you're saying, they'd like to get out of those apartments and be in a single family. So if we can provide that, and of course there's a huge shortage in most markets of that. So let's provide that, So
Exactly.
yeah. All right. Well, let's go to our next article from Summit Daily here in Colorado, where Kevin and I are.
Yeah.
Summit County officials can now ask platforms like Airbnb to remove listings for unlicensed short-term rentals. So I guess they're doing some kind of audits and finding people aren't licensed. I don't know. I used to be a super host with Airbnb. I don't know what you guys know. Maybe you can comment. I assumed that you had to have your license to be able to even get onto the Airbnb platform, right?
Yeah, that was my assumption as well. At least in the Chicago market, we have medium-term rentals on the B&B platform, and they don't even allow you to post unless you provide the license number. So this is sort of surprising, but not surprising. County officials, government officials, they do have a need to regulate these types of listings, and it actually helps out the owners that are doing things correctly. But I've always been against short term for reasons like this, and market compression. Now that everybody's back from COVID, B&Bs seem to be taking a big hit. So I've always been against this in theory, although we do have a couple.
Mm-hmm.
Very small sliver of the portfolio.
Mm.
I actually have one in Summit County. But it's interesting. I didn't realize that you had to have a license number to get into Airbnb because that has not been my experience. And I could tell you Denver, just came out with the licensing. So this is probably similar to what Chicago would do. And there's regulation and rules around the overnight rentals. As long as you go to 30 days, you're fine. Or in Denver, if it's your primary. So you could rent it out for a weekend while you're on vacation or rent out a room in Airbnb and be fine. But you know how they're finding out if you're doing that without a license? It's Airbnb. Like you're basically telling the world what you're doing. And so there's people trolling that site looking for violators of the licensing rules. And Denver's catching them. Apparently so is Summit County.
Yeah.
Yeah. In Chicago, I think it's 32 or 34 days has to be the minimal listing. So,
yeah.
And they do require us to enter a license number before. So maybe the platforms regulating based on the county rules or where it's getting squeezed the most by the government officials.
I wonder if they verify. You just put a number in. Are they verifying that, or you can just put a number in and get it listed? Interesting.
That I don't know.
I'm trying to remember.
I'm in the tech
5 years. Oh, go ahead.
I was gonna say, yeah, I'm in the tech space, and a lot of my colleagues, they will rent out short-term rentals. For the income, but also, for the tax benefits that come with it as a way to reduce your taxable W-2 income. One of the few ways, I believe. I'm not too familiar with it, but I know that it's come under fire, not only for some of these regulatory changes, but also even it's in the crosshair because some, politicians think that it's contributing to the lack of affordable housing, where investors are just scooping up properties rather than listing them at affordable, rates for families in the area. They're renting it out at high prices for tourists. So I think this is just the beginning of the trend where we're going to start seeing more of a crackdown on Airbnbs. And I don't know, maybe some of it's pressure from the hotel market and hotel lobbyists. They might see it as a threat to their business model.
I agree. Every time something like this happens, it's multivariate, right? There's so many different factors that come into play. So it could be a little bit of each.
All right, should we jump to the next one? So from Snopes, I guess Antonio ran it through that. He's our producer. Never seen.
Never heard of it.
Better Snope it. Is that a verb? All right. JD Vance owns company that sells American real estate to foreign investors. Yeah. So I guess if you read the article, sounds like he was an investor in this company. He's kind of backed off of actively managing it, but they were letting a lot of foreign investors in. But it said, let's see, it restricts investments to U.S. residents or entities. Foreign-owned U.S. registered businesses are eligible. Anyway, and a lot of this is in U.S. farmland. So,
yeah. So is this more of a political thing, or you always you asked me, James, to get on here and just be transparent. Just
do it.
And say, who fucking cares? Right? I mean, so.
I'll take the other end of the spectrum there, just because the article does talk about a little bit of control over farmlands, control over the supply of agriculture and how it operates. So like thinking from, a lot of the tensions overseas and fears of invasion and political control. Like, for instance, I heard about Chinese entities coming in and purchasing power companies or rights to water and restricting or affecting the way that American companies do business. Mm-hmm. And I know it's a big thing in China too, where in other countries where foreign entities come in, purchase things that have to do with infrastructure, and they really restrict the way local governments operate, I guess, is the easiest way I could say it. So from that standpoint, I do care. But from another standpoint, as long as it's regulated and they can't have very much control, I guess I'm okay. I don't know.
I hear what you're saying. I disagree. I think I don't care, but it's definitely an investment in a fund. So typically when you have a fund, the foreign investments isn't the manager of that fund. So yeah, I guess I'm not seeing the concern. Well, and don't we want foreign investments? Isn't that exactly what we want?
I agree with you on that point, as long as there's no control.
Yeah, that's fair.
Yeah, I know we've talked about it on the show before, some specific areas like I think Florida and some other states where they were concerned about, especially if that's not a fund, it's just an entity buying and they've got all the control, like you said, RJ. But like when they're buying a little too close to like a military base or water reservoir or something, they're like, kind of like questioning what's going on there. So, Keshav, did you have any comments?
I mean, yeah, I think it's just we know media and probably media in general is probably a little left leaning these days, and they're gonna find anything they can to try to create some sensation out of it. So, and I mean, both sides, I'm sure, like it's just part of the game, right? It's part of politics. So, anything to create clicks and get people riled up, they're gonna do that. So. Nothing new here, unfortunately. Just for politics, maybe even American politics specifically.
Yeah. Right. Yeah, that's the point of this thing too.
Who's running against him is the question.
Yeah, exactly.
Let's jump to the next one from Mortgage Professional America. Are real estate investment opportunities growing as rates fall? Anybody want to jump in on this one?
Well, I think
here.
Go ahead.
With thanks. I think that's you, RJ. Thanks, RJ. I think here, the opportunities, I would say, if anything, maybe it's not the right take, but if anything, they're falling. I think as rates start to increase, your valuation is going to go up, right? So if you had bought when rates were high, now your valuation has increased, and you can kind of ride the appreciation. But if you're entering back in, not only are you going to have to bid higher, you're going to face increased competition, people who weren't able to cut it when rates were really high. So, and as we know, when rates drop, it's a lot easier to do business in general. So you're going to have increased competition on the acquisition side of things. And then those of you looking to dispose and exit, you're going to benefit from this tailwind.
Man, your sound is really bad.
Yeah.
Cutting out and scratchy and stuff. I don't know what's going on there.
Maybe his internet.
Well, who knows?
Yeah. To go off Keshav's statement, I mean, it's classic supply and demand, people entering now that rates are dropping, more buyers coming into the market because they can afford. I mean, it's a story as old as time, and I know brokers utilize this as cannon fodder to get their buyers amped up and come in and start looking again. Investors, mentors are constantly talking about purchasing before rates fall. Now that rates are falling, more opportunities, more inventories coming on market, but that also means that there's going to be heavier competition. So, it's just classic supply and demand.
Yeah, my thought is very similar to both. RCN is actually a competitor of Pine because they're a private money lender. Now they're not nearly as good, so we'll just say that. But so they're really focusing on this DSCR. So for the listener, DSCR is debt service coverage ratio, and it's very common in underwriting commercial loans. So you don't see it on the residential side as much, but it is becoming more popular. So a DSCR loan, which is what they're talking about here, takes into account the net operating income of the property. So saying it's a little single family house, which is where their space is, then does the rent or the net operating income cover the debt coverage? And if it does, then they're not so worried about, your personal income. So for real estate investors and real estate realtors or mortgage brokers, anyone that's writing off a lot on their taxes and not showing income, a DSCR loan in the residential rental property space makes a lot of sense. But when the rates are high, you're not going to hit the coverage ratios that you need to qualify for that loan. As the rates drop, then the income from the property does become enough to cover the mortgage payment. So more borrowers qualify for the loan. So I think what they're trying to allude here, the opportunities are coming when rates drop because there's more credit available.
Hey, Kevin, this is a little side question for you. Mortgage rates are fluctuating, but hard money lending, does it have anything to do? Is it totally disconnected?
No, and to RJ's point, mortgage rates, mortgage rates are going up right now, which is mind blowing because there's an expectation of further cuts in the short term rate. But to his point, it's all supply and demand. Mm-hmm. So mortgage rates are tied to the 10-year and foreign investments. When foreign investments come in and start buying this stuff up, it can impact the rates, right? And as we issue and the supply goes up, those impact the rates. And dude, we have a government spending problem. I don't care what side you're on. There is a problem, and both policies are going to increase that problem. There was $1.8 trillion of deficit spending in the last 12 months. $1.8 trillion. Now, how do you think the government pays for that? It's the Ponzi scheme, James. What they do is they issue more treasuries to pay the interest on this debt. And now the interest on this debt is surpassing military spending, if that's scary. And that's where we're at today. So 1.8 trillion, and now we're going to have to issue more treasuries. As you issue more treasuries, you have to charge or pay a higher interest rate to get China to buy that stuff. So that's going to hold up mortgage rates, even when short-term rates come down, because it's supply and demand. Now, I know I didn't answer your question at all, and I went off on a tangent that we're probably not even supposed to be talking about. The mortgage rates in private money lending are tied to supply and demand also. The only thing that I've seen in 18 years of track record here that impacts rates is competition. So as competition comes into the market, it'll drive rates down. It is not tied to the short-term overnight rate or mortgage rates.
Cool. Thanks for covering that. That's awesome. All
I
right.
didn't mean to sabotage your call here.
No, this is why you're on, man. Like, this is good stuff. And like, tangents are cool. Like, I just that answered. So
I just when he said supply and demand, he's absolutely right, and that's what I think people don't understand. That's how pricing works in an open market.
Mm-hmm. Yeah. We got another article coming up with. I'm going to probably comment on that. So, all right. Keisha, did you have a comment on that in the last minute?
No, I think kind of what I mentioned earlier, and what Kevin and RJ have been echoing to. It's opportunities will. I think transaction volume will increase just as there's more opportunity, and like RJ said, more buyers coming back into the market. There might be more development as well, more ground up construction, now that the costs of borrowing are lower. But then with that, you might see, labor pricing coming back up too, because now that labor, again, supply and demand, they have more projects that they could be working on. They're going to charge everyone a little bit more. So it's not as easy as these headlines want to make it, because you can't explain how, all these different trends and variables impact supply and demand. But I would say overall, if you just bought in the last year, maybe 18 months, these rate cuts will help. And then if you're in distress, your chest will feel a little lighter when you go to sleep every night.
Yes. Cool. Let's take a break to learn from one of our sponsor partners.
Tired of chasing those elusive off-market deals? Sick of feeling like you're always one step behind the competition? Well, hold on to your hats, because FlipBid is here to change the game. FlipBid is a revolutionary new platform that connects you with off-market properties like never before. Imagine getting instant notifications on those golden deals before anyone else does. Virtual tours? Check. Real-time notifications? Double check. Seamless communications with sellers, buyers, and other investors? Triple check. FlipBid isn't just another app. It's your secret weapon to the real estate game. Ready to flip the script on your investing journey? Head over to UnitedStatesRealEstateInvestor.com/FlipBid now to snag 20% off the Pro plan. Yes, you heard that right, 20% off. Whether you're a seasoned pro or just getting started, FlipBid is designed to help you crush it in the world of real estate investing. Don't miss out on this epic deal. This offer won't last forever, so what are you waiting for? Visit UnitedStatesRealEstateInvestor.com/FlipBid now and join the revolution. That's UnitedStatesRealEstateInvestor.com/FlipBid. Your future self will thank you. FlipBid, where your next big deal awaits. Let's make some magic happen.
All right. Speaking about FlipBid, that last ad, tonight, the FlipBid actually does their TKO series. There you can see it on the screen, where FlipBid will go unbiased, like head to head with any other prop tech software as a service, any of these different real estate investing apps, and they'll help you choose what's right for you. Maybe it's another one, but they're being totally open. So you can join that live stream tonight at 6:30 Eastern. So adjust for whatever area you're in. And to go to that, go to UnitedStatesRealEstateInvestor.com/FB TKO, like Facebook TKO. So, all right. Well, let's get back to the news. From Fox 13 News, Tampa Bay, Florida residents planning to sell homes leave the state after hurricane season. quote, "We're done," unquote. So I'm sure everybody's heard of what's going on over there. Any of you guys have any investments in Florida?
So I'm building a single family home in West Rotunda. It's a bit, maybe 20 plus minutes from Fort Myers. We were luckily able to escape just some high winds ripping off some roofing sheathing. I do have a lot of friends that are investors. They were able to easily escape very low damage. However, my uncle got about 4 feet in his house, and he's in St. Petersburg, more Clearwater area. So we're having difficulty dealing with the insurance companies, finding contractors. I'm leveraging GCs that I've gotten in contact with through investors in the area. But, I don't know how much that plays to this other than, yeah, it's sad. It's a tragedy. And I feel for everybody that's dealing with any type of loss out there because it's tough.
Yeah. Years ago, I got a friend of mine into a multifamily syndication in Panama City, Florida, and he wired his funds, and the next day, Hurricane Michael, I think, hit, and it just destroyed, not completely, but it like ripped off like sections of roofs and parts of walls missing, just trashed this place. And I was like, oh my God, look, this is a friend of mine that I got into this deal. And I'm like, oh,
hopefully it wasn't his first.
It was his first. Yeah.
Wow.
He also had a turnkey deal go south. But that one, luckily, the operators, some people I knew through some training, like with Anthony Chara here in Denver, some associates of his, had a solid team down there, and they had like GCs, contractors in an adjacent state that were ready to go. Came in, fixed it up as soon as they possibly could, got it back up and running quickly before most other operators did. And they were able to get a little bit more rent, actually. Not gouging anybody, but they had the advantage of getting them back up and having the supply. And he didn't cash flow that first year, but he doubled his money within like 2 years. So I was like, thank God. Like that's a lesson to pick good operators. So,
yes. Yeah, and the power of housing providers. I'm sure he acted as a refuge in time of need. So I actually do have a partner, a personal partner, owns 96 units in Tampa. So I haven't reached out to him. So this article actually put that forefront. So I think I'll give him a ring after this.
Yep. I was going to also mention, not to get sidetracked from this article, but so what we have started doing, I learned from that. Like, luckily it was a good operator, right? So now what we do, we've got a group of people that raise funds for syndications just like this. So we'll bring in an operator, and we, as people that know the right questions to ask all the questions. Like, have you ever had to do a capital raise when rates went up and you were forced into refining after your 5 or 7 year term? Like, what did you do? Those kinds of questions that maybe a passive investor wouldn't know to ask. And then we dive into the deal itself. So like Panama City as an example, we do our own underwriting, not just trusting them. We actually run our own numbers and then have a 220 point due diligence checklist, including going to the property. And so I just bring that up because people don't want to lose their money, right? They want to make money, but they don't want to lose their money. And they don't know the questions to ask, most passive investors. So we're adding that layer of due diligence to make them feel comfortable that we're asking the right questions. So anyway.
So I actually have a question. It's a subset of that, if you don't mind, because I heard a little rumor that the SEC was cracking down on capital raisers that don't actually participate significantly in the management of the property. It's just what I heard. And I didn't think much of it because I'm an actual operator. We do significant amount of operations in the syndications we have. And I was just wondering, as solely capital partners, have you heard that, or
I don't know where they're at with that. I know like the fund of funds model, which we're talking about, there's people looking at that more because it's becoming more popular. Like, sure, that could go sideways. So I mean, the alternative is to become more of become a GP, part of that operator and have some kind of a role. But
I have a fund of funds, and it definitely helps me sleep a lot better at night, knowing I'm more SEC compliant than being a co-GP of 50 co-GPs on a syndication.
Right. And James, I just want to say I appreciate that work you're doing, because you got to be a steward of the investment. You got to care for your investors, and it's really about like putting them first. So when you have a lot of the new money, so I understand why they're cracking down, because a lot of these capital raisers don't know anything about real estate and just raise capital and the deal goes sideways. So it's problematic in the industry. So I just want to say I really appreciate what you're doing there.
Yeah, thanks. Yeah, it's we call it like it's equated to like Shark Tank, It's like we got a team.
Put them through the ringer.
Exactly. Yeah.
Yeah. You should.
And I don't know all the questions to ask, or my partner doesn't. But as a team, we might be missing something individually, but as a team, we're probably going to cover all the bases. So, yeah. Well, there's another fun tangent. So back to Florida. Any other comments?
Florida, it is unfortunately going through kind of the pain that you're seeing on TV, and the storm that just went through North Carolina too. Rather unfortunate. And then just sometimes it looks like our government does too little to help them out, which, I mean, that might be its own tangent. But I know we're developing homes all along the Gulf Coast in Louisiana, Alabama, and even as built-to-rent developments, we're feeling the burden of rising insurance costs. Like 2-3 years ago when we first started, we were underwriting these homes at about $1,000 per unit in insurance. And now it's almost doubled to $2,000 per day in insurance per year. And at least on the commercial side of things, I know you go the umbrella policy route where we work with like a large company like Greystar, and they spread out the risk between people like us on the Gulf who are higher at risk, and maybe they have people in Salt Lake City or somewhere inland where there's not as many natural disasters. But I don't know how that dynamic works on the residential homeownership side, where you have people who are especially susceptible in Florida, and if you're able to spread that risk out amongst, the entire country of homeowners. But it is unfortunate that people can't pay their home insurance, and it becomes too onerous, then they have no option but to sell, to move somewhere else. There's lower home insurance costs.
I think so.
Yeah, it's a tricky thing. And we saw that.
In addition to the cycle.
Say that again?
Yeah, I'm saying, the rising insurance costs in addition to the cycle of having your home just repeatedly flooded, damaged,
So many insurance companies pulling out of Florida. They like prior to this, I know we've got a single family rent to own in Panama City also, and insurance doubled on that one. It's like, oh crap. Like, luckily we had a little bit of, cushion with cash flow, and it didn't totally take us down where we weren't making anything, but it was a hit. So any other comments on that before we go to the next one? Let's see, from Fox Business, existing home sales fall to lowest level since 2010. They got all sorts of stats in here. It says in September it reached a 14-year low.
That's because there's nothing to buy.
Yeah, supply and demand.
Exactly. Yeah, it states home prices rose, sales fell. Classic supply and demand.
Mm-hmm. What I do find interesting, just yesterday, I think it was, the Case-Shiller report came out, and 4.2% median price increase over the last 12 months. And what does this one say? NAR says it's, I thought I saw it in here. I don't know. And I know that the Fred is a St. Louis Federal Reserve. You get a lot of great statistics from that website. They're telling us that median home value went down. So NAR's up, Case-Shiller's up, Fred's down. Like, what is that? What's real?
Yeah. Yeah, I wonder where they're pulling that, because as we all know, markets are very different, right?
So this says the median home price rose 3% year over year to 404. So this is according to NAR. But the Case-Shiller report just came out yesterday, says 4.2. So that's a significant difference. That's over 20% difference in their statistics.
Yeah. Massaging data.
The good news is they both say it went up. So they're sad. And we're at a 20-year, we're still floating around a 20-year high in interest rates, right? If you go back 50 years, we're probably pretty close to normal. And you hear people say that all the time, well, 6% is sort of a normal rate. Well, not over the past 20 years. It hasn't been.
Yeah. Yeah, what is normal? Any comments on that? We can go to the next one.
I guess it'd be good to explain to maybe the listeners at home how, if sales are down, how are prices continuing to increase? Like, who's buying? Is it just investors who are buying and holding?
That's demand is higher than the supply. That's when prices go up. And here's what's scary. Demand is going to continue to increase. The Mortgage Bankers Association is saying that we're going to see a 28 to 30% increase in loans in 2025. Now, some of that is rates coming down and a chunk is refis, but I don't know what it is, 12 or 13% new purchase money loans. So demand is increasing. And those statistics, I believe. And it's two things. People are look, we're in the middle of it. We're seeing the largest transfer of wealth from cohort to cohort. The baby boomers, sadly, are moving on, and they're passing their wealth. They're the richest cohort by a long shot, and they're passing it down to the millennials. Millennials are in prime buying age. So that will also, no one's talking about this, but that is going to increase demand. All of a sudden, housing becomes affordable when you're getting an inheritance of 300, 400 grand.
Yeah.
So this, I guess my point, even with low transactions, you're going to continue to see price increases, in my opinion.
Mm-hmm. Yeah. Anybody else? All right. From NBC News, senators take aim at big private equity landlords as rents soar. A couple different senators.
Let me ask, how does this help anybody? How does this help anybody? This is like and I don't want to get political here, but because I don't like either policy, frankly, but the Kamala give you 25 grand policy, like, how does that help affordability? I hope it happens, because then all my properties are going to go up in value. It's doing the exact opposite of what, and this is the exact same thing. So we're going to be putting more houses on the market. So we're going to help affordability on one side of the equation, which is the homeowners. And then meanwhile, the renters are getting crushed, except for Keshav, you're going to do well with your rent to own model or your build to rent model, because we're taking all of these rentals off the market, right? So we're going to help affordability here and we're going to hurt it here. And I don't understand. I don't understand how that helps.
Yeah.
I can't tell if it's intentional or if some of our politicians just need a basic economics 101 class on how supply and demand and like money supply works. Like if you give everyone 25K, how is that going to help anyone?
Yeah, I don't think they get it. They're just trying different things.
Now, a lot of our plan
They
is
just don't
good, though.
understand.
Like the incentives to developers to build more inventory, that helps,
There you
right?
go.
If we can get more inventory, that will help. So I like that piece of it, but just giving away for everybody, I don't understand how that really helps.
Yeah.
It'll help all the homes that they own all across the country.
Say that
Well,
again.
maybe I'll get into the build to rent
I
model
was
also.
joking that it would help. It would help the home prices of all the homes that these politicians own, like all across the country.
Oh yeah.
Yeah.
Benefit their bottom line. Yeah. I think this is a little bit overblown. I think a lot of it is. I think most people who own. There was some study, maybe it was Yardi, I forget who it was, but they said institutional owners aren't really the vast majority of
No.
Just
people
small,
who
tiny bit.
Yeah.
It's
when
a
you
very
look at the
small,
numbers. Yeah.
And it's just these politicians are always on the wrong side of the equation. They try to pass rent control laws and they try to pass restrict free capital markets movements, where rather than that, we should really be removing restrictions around zoning, just making it a lot easier to develop, making it
100%.
making it a less bureaucratic process, and just all these just a little bit where they want to build. In California, don't slap people with like $50,000 fines if they want to build a unit in their backyard. It passes codes and everything, but there's plenty of horror stories where people own their land, they want to put an extra unit up, but they just get around these application fees and environmental studies and just all this other complete nonsense.
Yeah.
But if we attack the wealthy, which is private equity and institutional investors, then we get votes.
Right.
Yeah. We're actually dealing with this in Chicago right now. So we're building homes in Chicago. The mayor has just enacted some out of left field laws about on the development side. The aldermen are making it tougher. The government's making it tougher for us to build homes. But all the meanwhile, they're saying they're doing this for affordable housing. And it's like, I don't know about that. But I do agree with the government incentives, because the reason that we don't build on the South Side, why we don't build more affordable housing units, is because we're at break-even costs or even losing money to build those assets. So what we do need is help in the form of grants, TIFs, just support in general.
There's so many ways we could go off on this. Like Keshav, you mentioned rent controls. Oh my God. Let's not go down that. But back to this article, they're talking about scrutinizing these big companies, and they're talking about them driving the rent rates up. It's I don't know what they're talking about, because like we keep saying it's supply and demand. They can't force the rent up, because there's other options, right?
Oh, they're talking about collusion here.
I guess.
Well,
but if they're a small portion of the rental pool, right? There's all these other options. They can raise their rates, but they're not going to get enough people renting, right? So
I think
just kind of go for it.
both Keshav and Kevin are correct. Lack of education, attacking the wrong people, and to Kevin's point, doing it for votes and just notoriety and attention. So, unfortunately, that's the world we live in, and it's up to us to just navigate it, I guess.
I think some part of it is also NIMBYism, as much as we don't want to admit it. If there's more supply on the market, and that drives everyone else's home down. And for most Americans, most people in general, their house is their biggest store of wealth. So I think oftentimes, instead of pointing fingers at other people, a lot of times it's better to look inward and be like, am I fine with taking a hit on my property value? If that means 5 minutes once they come on the market, and that solves affordability, then I think people would reconsider who they're pointing the finger at and where the problem's actually coming from.
Something that no one ever talks about also is how this hurts middle America, because now you're attacking these REITs where your and my 401k is invested, right? A lot of times these are public companies, and you're trying to hurt their bottom line, which actually flows directly to the people you're trying to protect. We don't talk about that though, do we?
That's a good point. Yeah. Let's see. Comment up on the screen there. What does that say for people listening in? I had it too small.
How do you see trends affecting smaller investors? So on the regulatory impacts.
So we're doing we're putting that. We talked about it a little bit at the beginning, but that Success Summit in Denver. So for the Denver listeners, it's only $39. So we totally just break even. But we're going to be talking about regulation. We're going to be talking about the economy, because there's a lot of stuff happening right now, especially in Colorado. And I think you have a pretty heavy listener base in Colorado. So I mean, rent control, just cause evictions, and I know in Chicago, you guys are dealing with some of this too. At least I think you are.
Yep. We are.
It's becoming difficult for the small investor to be successful. So listening into podcasts like this is exactly how you navigate that.
I would also take that one step further. So the wife and I are very heavily involved in the NBOA. It's the Neighborhood Builders Owners Alliance in Chicago. And what they are is they're essentially a body that represents homeowners, small investors, housing providers in helping educate the government in how their policies really affect, not the superficial, if we do this, it's going to be a great outcome, but really how it affects from the ground level. So I got to give a shout out to Mike Glasser. Great guy. We're very heavily involved. Again, the NBOA, there are over 2,800 properties represented by his group. We meet with aldermen, mayors, senators, and just try to help educate and see where their heads at. So not just hearing about these regulations, but be actually taking a stand, voting. We send out emails when there's votes to be had. And that's why we're really taken aback by Brandon Johnson's new, I think it was I forgot what it was called. It was a gentrification type law he put in effect that gives right of first refusal to tenants of buildings when operators are selling. So
That's amazing. Well, I have to run. I have another meeting that I need to jump onto, but sorry about that, guys. But great conversation. Thanks for the invite, James. Great to meet you guys.
Great
Good
to
seeing
see
you.
you.
Awesome.
All right.
Thanks, Kevin. If somebody wants to connect with you, you want to shout that out?
Yeah, so it's pinefinancialgroup.com. But man, if you're in Denver, you got to be to the Success Summit. It's the largest one in the States. We'll have over 300 people there. So if you're in Denver, it's denveriss.com. Super affordable, obviously. I mentioned that. But yeah, otherwise, pinefinancialgroup.com. Thanks so much, guys.
Awesome. Thanks, Kevin. All right. Well, let's jump to the next one from Mansion Global. Owners of older South Florida condos are watching values plummet. And I'll kind of give a little recap here. So they're talking about condos that are over 30 years old. They have to have these structural inspections with some kind of requirements. And so it's really affected them. So they're saying that the older ones have dropped 21% in value over the last year. But the newer ones, newer than 30 years old, have seen an increase 9%. So it's really affected those investors that have those older condos.
Yeah,
What do you guys think?
to a point, I wonder what's driving that value drop other than the fear. And I know there was that building that collapsed that caused a lot of this fear. So, this might be a reactive reaction rather than being actually proactive. I do know my wife's grandfather lives in Key Biscayne in an older asset, and they're out there doing a lot of work to the condo building. Now thinking about it, probably to battle items like this. But the question I always have when I see headlines like this is it actually warranted? Is it fear-based? Do the people that are causing the price drop actually know? I know it's not just one person, one group that causes that drop in value, but is it just market sentiment? Big reason why I don't play in the stock market very heavily, because a lot of that's driven by market sentiment when the actual investors don't even know what they're doing. So that's my 2 cents.
Yeah.
I think this, I definitely echo RJ's statement that this might be maybe a potentially overreaction by those owners. They don't know what's going to be time to sell, and they might think that based on how these hurricane seasons have been going, it might just get worse and worse and worse. So they might try to get out, while it's good to get out before it gets a lot worse. But on the other hand, depending on what kind of requirements you have to satisfy and how much of an uplift it is, I think this also represents a good opportunity for anyone who's in the area where they can take these units, either get the necessary inspections done, reinforce the structures, maybe even just tear down and build completely brand new to follow the new construction codes, the latest, construction methodologies and materials, and put up newer, sturdier buildings. So I think could be an overreaction, but also presents opportunity as well for people who are able to navigate it and turn it around.
What this actually reminds me of is the porch collapses in Chicago in the early 2000s. A couple of porches collapsed, so they enacted new code to over-engineer porches, and that actually hurts smaller investors. To whereas a porch may have cost you only a few grand, now it's tens of thousands, because it was an overreaction of the government to now have over-engineered requirements on porches. So I sort of understand the fear base, because if Florida's government, which I do know enacted higher regulations on building inspections, that may hurt actual building owners because the cost associated with that. So I don't know. It's always a fine balance, and as we've talked about multiple times in this live so far, is everything's multivariate. It's a chain of events, chain of reactions. You can't act one way and not affect 10 other things. And so that's what it reminds me of, though.
Yeah, interesting. Yeah, I know there's a gal that I met years ago from Colorado. She would go into other countries, like Haiti as an example. They put up whatever. There's no regulations there. And these buildings and shacks and whatever would collapse and kill people. So there's ways to rebuild, just knowing how to build, maybe just as affordably. So she'd go in and basically teach these people and the builders and contractors how to rebuild and do it so it's not killing people the next time. So it's important, but like I say, maybe they're over regulating, overbuilding, and went a little too far, right?
Right.
Well, let's take another break for our next partner.
Are you looking to elevate your business through exceptional content? Universe Media Publishing is your gateway to success. We understand that in the world of business, content is king, but not just any content. Your business deserves content that captivates, convinces, and converts your audience into clients. At Universe Media Publishing, we specialize in crafting SEO-rich web content, persuasive copywriting, and marketing copy that resonates with your audience. We don't just write, we engage, we connect, and we deliver results. Imagine your brand's voice amplified, your message crystal clear, and your presence dominating the digital landscape. That's the power of partnering with Universe Media Publishing. Don't let your business just blend in. Stand out, be heard, and make an impact. Connect with us at Universe Media Publishing, and let's turn your vision into reality. Visit universemediapublishing.com today. Your story, our expertise. Together, we'll create magic.
Okay, back to the show. From New York Post. New York City landlord accuses famous tenants of trashing their sublet and wrecking a $115,000 Charles Gwathmey table for the second time. I must be out of the loop. I don't know who the hell Charles Gwathmey is. And I didn't know who these I didn't know who these celebrities were. I had to look it up. Then I recognized Sam Worthington. He's an actor, and his wife damaged that loft in Chelsea. I guess they left large divots in the table. And then I guess the same guy, Eric Steele, also sued Ariana Huffington for damaging the same table in the past.
So my immediate question is, why is that table there? If it's been damaged multiple times, why is it there? And if it's one of a kind and you care about it that much that you're suing celebrities for it, why is it still there?
Yeah, exactly. Yeah.
The first thing that came to mind when I read this was, I wish I had this problem.
Yeah.
First world problems, for sure.
First world. Like,
the 1% of the 1%. Yeah.
Yeah.
And I just had to look up who Sam Worthington was, and I'm like, oh, Sam, what are you doing?
Yeah. What was he? Was an Avatar, right?
Yeah, he was in a few things. Yeah, Clash of Titans, Horizon looks like, a couple of smaller grade movies, but
Aussie guy, right?
Yeah,
so this table's less than a mile away from me right now. I wonder if I should go give it a visit and see how it's doing.
Oh yeah.
Yeah.
Should pull up that Charles Gwathmey table. I want to see that sucker.
Yeah, it's probably one of a kind and old. That's all I could think of if they're making such a stink about it.
Yeah, crazy. All right, from Washington Post, study DC.
Wait.
regional- Yep.
You're telling me you don't want to talk more about the Charles Gwathmey table?
Okay, let's keep going.
I got a table replacement. We could just exchange like kind.
Yeah, there you go.
I'm at the grandparents' house right now.
Yeah.
It's a good replacement.
Solid. All right, study. DC region had the highest rent increase among major metro areas. This is went up 12%, according to Redfin.
That makes me question, why am I not investing there? I wonder what caused that growth. Does it say in the article?
This is primarily affected suburban areas. That stems from strong local economic conditions, rising home prices, and pushing more residents toward rentals. So, yeah, there's that kind of teeter-totter effect. Multi-dimensional, like you were saying, RG.
Yeah.
On the flip side, Jacksonville and Raleigh went down, right? So,
Yeah, I guess it might be just strong like economic growth in those areas, and while everyone had maybe for like the last 4 years, everyone was just screaming, every other person at least, just Sun Belt, Southeast. These people didn't have as much housing. So I mean, hey, maybe we see the next, and we know that real estate's cyclical, right? You have lack of supply, then it starts picking up as more and more people start hearing about it. Then it's oversupply, oversaturation. Vacancies start creeping up. People start, drawing back, and then the cycle just repeats itself. So I think we obviously went through that oversupply with the Sun Belt. Now we'll see where DC, kind of that mid-Atlantic area, does. And I feel like I've heard a lot of buzz about the Midwest lately too. So I'm sure there's always different parts of the country that have, that come into the limelight, come out regularly. So.
Yeah.
Okay, from New York Post, homes for sale in short supply as there's now 30 renters for every household on the market in U.S.
Well, it's good news for us as home developers. And to be quite honest, that's sort of why we took this position. We're building single family homes on the higher end, higher scale, because we're finding assets in Chicago were harder to come by with the, rate increases and the cap rate compression. So we started building homes because we started to see there was a major lack of supply. So in highly desirable areas with very low new inventory, new assets, that's why we took this stance. So it's very transactional. It's not actually, it's not for rentals or anything, but I could see this article because we see it on the micro nuances across the nation. It's all everybody's talking about nowadays. So,
yeah, I've been putting together an ebook on build to rent, and I'm an engineer, so I love geeking out on numbers and stuff and trends. And one of the statistics that stood out to me, if I'm remembering the numbers correctly, is that around in the 1980s and the 90s, entry-level housing, maybe 1,500 square feet or lower, comprised 40% of all new housing starts. Now that number's down into the single digits, I believe, mainly because it's not as profitable to build and sell entry-level housing. And so for us as build-to-rent developers, all of our floor plans appeal to first-time homebuyers. They're all under 1,600 square feet. So it's not these, massive 4-bedroom, 5-bedroom homes. It's 2s, 3s, and 4s, but it's a lot more compact, and you still have amenities like you do in apartments, but it's just at a more affordable price point. And I think that's one of the big things is the homes that we're building, it only makes the profit, it only pencils out as the homes get bigger and bigger and bigger. And so these first-time home buyers, unfortunately, their wages haven't kept up with home prices, and they've just been neglected these past few decades with the way home building has gone.
Yeah. Yeah, I do. Do you guys see the trend that home ownership's going to be more and more difficult in the future years due to affordability? And Keshav, to your point, that's why you're making smaller assets for the affordability. But I heard from one of my colleagues that we're moving more and more to like a Europe nation where the middle class can't even afford housing or afford to own. So I'm curious to hear your sentiments there.
Yeah, I think I read that. So I think Switzerland primarily is a nation of renters, for example. And I think if our regulations and just, economics stay the way they are, that's likely what is going to happen. People are increasingly being pushed towards, unfortunately, renting and not owning. And it might be just a big part of the, own nothing and you'll be happy movement. Eventually you might, in a very dystopian world, like not to get all Orwellian on everyone, you might not own anything. You won't have anything on your name. It might be less of a headache to maintain because on one hand, home ownership is a pain, right? You have to constantly keep it up. You have to pay property taxes, you have to pay insurance, and it roots you down in one place. If you buy in a place, like that is where you are setting roots down. Whereas if you rent, especially in today's more remote friendly lifestyle, you can hop around, try a city for a bit. So I'm not saying renting's completely horrible, but at the same time, part of what this country was built on was the dream of buying a home. And back when our parents were growing up, that was definitely viable because I think it only took, one of the other numbers I was looking at was wage growth versus like median house home price growth. Back then, median wages might have been $23,000 and home prices were maybe like $60,000 at some point. But now it's that gap from a 3x between annual salary to home prices is more like a 4.5 to 5x.
Yeah.
I do think unless something changes drastically, again, with regulations or developer incentives, like you were mentioning, RJ, like that is where we are headed as a nation.
Yeah. There's a trickle down that I'm seeing too. Home affordability is tough. Renting is tough too. And so we're actually getting into co-living. So buying a single family home and renting out the rooms separately because it helps fix the affordability problem where somebody can't easily go have a 1-bedroom or studio apartment. Like in Denver, as an example, you're starting around $1,500 a month. And so there's a lot of workforce housing, people make 45, 50 grand a year or something like that, as an example, that just simply can't afford that higher rent. Or if they can, they're house poor, and some of them can't afford to even own a car. Maybe they can have the apartment, not the car. So they're kind of on that cusp. So we're seeing a trend towards that, and co-living fixes that problem because, like in Denver, you can maybe have a master bedroom for $1,000, $1,100, or maybe as low as like $900. So that's a big jump to getting a 1-bedroom apartment. So it's fixing that problem. And despite our a lot of regulation, like Kevin said, is happening here in Colorado, going the wrong way, making it really hard for investors to build and remodel and all that. They actually opened the doors wide open recently where there's a statewide law saying you can't limit how many unrelated people live in a home. So the doors are wide open. And luckily, like me and my business partner, Toby, have started a relationship with Pad Split. They're a big platform, kind of like Airbnb for renting by the room. So we're partnering with them to help set up homes and get people into them and fix that affordability problem. So
Yeah, I agree. I see a lot of SRO platforms coming on online. I met a few owners of SRO platforms, but on the other side of the coin, another thing people are doing, and I can attest to this because the wife and I live in a fifth wheel camper majority of the year. Now we do it by choice. We travel by choice, and we've been traveling the country. However, at the RV resorts we're staying at, we're finding a lot of more full-time families that live in campers and just travel for work or become stationary. For instance, we're in Colorado, Montrose, Colorado, and a gentleman, his wife, and their 2 kids had been posted at an RV resort for over a year. And same with Moab, Montrose, Bozeman, Montana we're at. So we see a lot more full-timers and that age getting less and less because they wanted to alleviate the difficulty of home mortgage, but also, to Keshav's point, be a little bit more transient. So I like it. I like seeing younger families take more control of their financial future. I hope the government at some point does step in and help with more affordable housing and also lightening up the restrictions on tiny homes. That's a huge thing. Tiny homes have been a big buzzword, but nearly every single local municipality restricts tiny homes, and that would help with the affordability issues.
Yeah, let's do that instead of freaking rent control.
Right? Yeah, exactly.
Let's not go down that rabbit hole.
Yeah.
I think
Tiny homes.
one unintended, maybe positive consequence of co-living too might be an end to, like, not an end, but maybe improving like the loneliness pandemic also, or epidemic that we have going on in this country.
Yeah,
and
we definitely focus on the community of that.
Yeah, as long as people aren't just cooped up in their rooms with like a VR headset on or something. But I think that co-living would promote, just mingling with other people, co-working. And again, something we like about built-to-rent communities as well is you have the feel of a single-family home subdivision, and you have your own backyard and driveway, the privacy, but your amenities are outside. You can still meet other families, other kids at the playground, the dog park, the clubhouse, the pool. So there's always, no situation's ever black or white. There's always positive consequences, like ending loneliness in co-living, and then negative consequences, like we're going to become a nation of renters. Is that a good thing? Is that a bad thing? I mean, I don't know that I necessarily see home ownership as a great financial investment, right? It's not, I don't think it even beats the stock market if you adjust for ongoing maintenance costs, the headaches of property ownership, home insurance, property taxes, all of that. But it is a great emotional investment, right? You get space for your family, for your kids, for your pets. But if you could achieve the same thing in a built-to-rent community, then why not, right? But then people on the other side say, hey, that's dystopian. If you're not going to, people can't even own their own homes, what are they going to own 30 years from now, if nothing? So, yeah, it's never as black and white as news articles or politicians like to make it seem.
Yeah. I mean, we could go down a rabbit hole too with home ownership, but I think tax write-offs and just paying down that mortgage and building that wealth over time far outweighs renting. But that is another tangent. RJ, I was going to ask, so I've got a friend, he just spent, in the next month will be a year. He and his wife and toddler went on the road with their fifth wheel. I talked to them the other day. Seems like they're enjoying the hell out of it. They're definitely active. Like I dirt bike and kiteboard and stuff with him. So they love being out. They're younger too. But I know a lot of people, they'll like go buy a Sprinter van and they last about a year. And then they're like, okay, we're done. We want to take a break because it is a lot. So how long have you been doing it and what's your thoughts on it?
So last year we did it for 9 months, went to Mississippi, Louisiana, Georgia, Alabama, Florida, I think I said Georgia, North Carolina, Connecticut, New Hampshire, Maine, and New Jersey, and New York. And it was amazing. So 9 months, it was super scary. It was amazing. But the only reason we're able to do it is because we have jobs. You know, I'm a full-time investor. I run the construction company. I run the NVR Capital, and we do everything remote. So we had the ability, and it was a little scary. We love it because we're outdoor. We're outdoorsy. We could be active. We go hiking. Every time I come out on what road trip, I lose about 15 pounds, 20 pounds, because every weekend we're hiking, fishing, walking around, riding our bikes. Last year we traveled with 2 dogs and my son, who's a year and 3 months. This year we only have 1 dog. My son's about 3. So we started in July of this year. We absolutely love it. But the Sprinter vans, I understand why they only do it for 1 year, because it's way too small of a space. We bought the largest fifth wheel essentially you could buy. So we drive around a 44-foot extra wide fifth wheel, and I pull it with my 1-ton pickup truck. So we detach. So the constraints are there, definitely, but as long as you could make it work and it fits your lifestyle, we love it. We just landed in El Paso. The camper is getting fixed currently, so we're posted up at the grandparents', and that's why I have this lovely background here.
Nice. Yeah, I have a special interest in this because my folks have a fifth wheel and a truck. They live most of the year in Alaska, where I grew up, but they'll come down to the States and just leave it. When it's dark and cold up there, they'll come down, kind of snowbird, basically. And I'll go hang out with them for a week or so every year and travel around. But they've been doing that for a long time. 20-ish years every year, but they're getting older. They're in their 80s, and they decided that this is going to be their last year. And I'm like, oh, okay, because it is, like, as you know, it's
tough.
It's not easy. You're not sitting around, but so they were saying that they were going to give me the fifth wheel and truck. I was like, great, but then I'm like, is that going to fit with my job and the different things? Like, I got to be local to. Can I do it? Maybe do referrals as an agent to people and not have to be here. And how long would I be able to do that or want to do it? Right. So it's interesting to me.
Yeah, I would say it's an amazing opportunity. You should figure out how to make it work, at least short term. One of the biggest things is, like, I mentor a lot of people and they say, I wish I could do that. And I look at their overall lifestyle and it's absolutely possible for them to do it. So it's just a little bit of a mindset shift. And as long as it fits with your overall living lifestyle, it it can be an amazing supplement to your mental health and your physical health. Like
Yeah.
I said, this is the first time I've had abs in 10
Cool.
years. And it's because, we're out camping, hiking, biking. It's got me a lot more active again. But you should try it. And the technology, sorry, last thing I want to say, the technology is now in the fifth wheels and the trucks are amazing. Whenever I host podcasts or Zoom meetings from the living room kitchen of the fifth wheel, everybody says, holy crap, that's nicer than my house. And like, if you see pictures, like it is very nice, but
Yeah.
we purchased the largest with the most room. So essentially it's over 400 square feet on wheels that we drive around
Yeah. With slide outs.
with 4 slide outs.
Yeah.
My son has his own room. It's got 1.5 baths, could sleep 8, master bedroom. My son has a room with his own crib, full-size kitchen, full-size microwave, oven, and refrigerator. So, yeah.
Nice. Wow. And Starlink.
And Starlink. Yes, it's actually sitting on the couch because I didn't trust the grandparents' internet. So I brought it in case. So it's sitting just a few feet away from me.
Nice. Yeah, that's amazing. I thought about getting one because my parents got rid of their Wi-Fi. They go off their cell phones, and it's a nightmare when I'm there trying to get a connection.
Yeah.
Oh
Yeah.
my goodness! Now they got the Starlink Mini.
Starlink. It's a lifesaver, and they sell it at Home Depot now. I guess
Yeah,
you could
and Costco.
buy some version for $299, and I'm like, this thing cost us $2,600. Like what?
Whew. Yeah, it's got
Yeah.
down. Yeah, and I think the
Yeah,
Mini
it's
is
come down.
even less.
Yeah.
Oh. All right, we got on a real good
Sorry.
tangent
Yeah.
there. I
sorry.
love that though. I wanted to hear a bit more. We have 2 more articles and
Nice.
getting to the end. So from Afrotech, Floyd Mayweather, Afrotech? That's awesome. Floyd Mayweather reportedly closes on a $402 million real estate deal to provide affordable housing in New York. Love that. I guess he's purchased over 60 buildings with more than 1,000 units.
Nice.
It's part of a group that said SL Green Realty. So that is
Well,
cool.
I'm very excited to see that he does have experience here. To be quite honest, I only looked at the headline and I was like, why is this news? But the very philanthropic heart of this, being able to provide affordable housing, it's truly amazing. And I often think about athletes and the 1%, how many of them always fight for more money, and it's like, what are you going to do with an extra 100 million? You don't help the economy as it is. And that's actually sort of my sentiment to why I don't watch a lot of major sports. But I get it, private industry, but I'm really happy to hear this. So let's hope he has the experience, or at least the team, or at least the money, the capital backing to make sure that this investment actually helps.
Yeah.
Is that, the whole part of being an operator is tough, and you can't just buy things because you think it's going to operate itself. You have to actually be very diligent in how this all plays out.
No.
Yeah, no, I've seen Floyd on some of Grant Cardone's events saying that he loves real estate and that he buys skyscrapers and stuff. So doesn't seem like it's set of something new that's too, maybe the affordable angle is, but it's, yeah, like RJ was saying, it is great to see that. I think a lot of people, when they think about investing, think that it's, you can either invest or you can have a positive impact. They often think that capitalism comes at the cost of having a positive impact on society. And I think that's not always the case, right? Like, this is one such example of that, where he's able, to use his capital that he has to invest into affordable housing. If you're able to use capital to develop other unique solutions to affordable housing, whether it's producing, cheaper housing, not by quality, but just by the price tag. I mean, more efficient construction methodologies or materials, whatever it is, or just investing in more units, right? Like, investing doesn't always, like, someone might read this headline, except for the affordable housing part, they might think, gosh, just another private person going and buying more housing. I don't think that there always has to be a negative stigma associated with investing. It can be done, and it should be done for the good of society.
Yep. That's why I like rent to own. I'm helping people that got told no by the banks and really want to own. It really helps them out. So, and the co-living too, I like that too.
Yeah. I think that's why Mike Lasser and the NBOA changed the way we talk about ourselves. So we say we're housing providers. We're not landlords. We're not slumlords because of negative connotation. And if you, again, look at the flip side of the coin and the good that we're doing, keeping rents affordable where they need to be, not being slumlords, actually putting money back in, reinvesting back into the buildings. And, to go back on our point here, when we talk about the government and specific policies, rent control, the opposite side of the coin is that housing providers like us won't have the necessary capital to make sure and ensure that these are favorable living conditions for our tenants. Tax increases, rent controls, items like that make it very difficult for housing providers to operate.
My brain's turning here. I'd like to find out more about that organization.
Yeah.
Is there like a website?
Yep. Yeah, it's the nboa.com. More than happy to put you in touch. We do very heavy Chicago and Chicagoland suburbs. So Mike Glasser is a pillar, and he works with all the large multifamily brokerage firms, housing providers, lenders. We all get together. They have a summer soiree. I actually sponsor those events as well, just because all the good that they do. And there's a mailing list. So anytime there's significant policy changes that are being voted on, he mails out to that mailing list to make sure our housing providers are notified, because, I don't know what it is. Maybe it's malicious, maybe it's not. But oftentimes when you're voting on policies, nobody gets notified. And then next thing, policies enacted, and you have no idea when that was actually voted on. So we do a lot with them too. You could visit Chicago Multifamily Club. It's a Facebook group. We're also on meetup.com. We always post and advocate any policy changes, awareness. My wife does an amazing job with just educating any of the new housing providers, investors, smaller residential that can actually make an impact and difference. So I used to be of that mindset where what's my voice can do. I'm just one person. I can't change policy. But sitting in these meetings, actually getting my voice being heard, shows how significant you can do. So we actually, I wouldn't say it was just us, but we helped stop the rent control being enacted in Chicago this last pass.
Yeah. Oh, that's awesome. Yeah, it's a constant battle. You got to have a voice of reason.
Yeah.
People just they don't see the big picture.
Yeah.
Yeah. Any other comments on that?
No, just kudos to RJ for what he's able to do to save the residents of Chicago, honestly.
Yeah. Yeah, that's awesome.
My sentiment is we need more billionaires to come up and prop the government. Like help out with items like that, because, you know, obviously the deficit that Kevin was talking about earlier, it's a concern. I honestly have, it's way over my head. I have no idea how to battle that. So
Yeah, that's complex. And those numbers it's really hard to, like, $1 billion is a hard number to kind of wrap your head around. But then you start talking $1 trillion, like what? Yeah. Well, hey, it's time for our extra fun news item from Creative Block. Forget AI image generators. An autonomous AI artist just made $351,600 at Sotheby's. So it's this AI artist that named Botto, Botto, sold some NFT art. Apparently I think it's been running for like 3 years, kind of learning and creating all this art. There was also a kind of a crowdsource component to it. When I read about it, I couldn't quite understand, but it sounds like they're kind of commenting and helping train it, but it just runs on its own. Anyway.
Yeah. I have a tech background. I'm a software engineer also, and I know that back in sometime between 2018 2020, like when this technology was really taking off, I remember a big sale happening back then in Sotheby's. So I remember just sitting down trying to figure out how I could make my AI generator and just have sell art.
Yeah.
Yeah.
This freaks me out because I was a graphic designer for 25 years before I got into real estate. And I'm seeing, like, I use it, ChatGPT, Dolly, to like come up with at least concepts that I'm like, wow, that's amazing. It would have taken me so long. And so I'll just have it, create concepts and get in and tweak it. And you can't really edit those or train it very well now, but like just coming out of the gate, it blows my mind.
Yeah, it's going to pose a lot of interesting ethical questions, though, as far as like, can you trademark it, and then if it, copies someone else's art, like, do they get credit for using their art or whatever as, training data? And then what happens to, I know a lot, I think Hollywood was on a strike, or maybe like some of these, story writers were on strike. Someone was on a strike because of AI. So what happens to all these artists? And even one of my colleagues, his neighbor is a partner at a law firm. And she said that, hey, usually when we get our junior lawyers, they work their ways up through the rank, just doing a lot of grunt work, right? And it's just hours of reading cases and analyzing, and nothing crazy, but it's tedious. But since law papers, to my understanding, are publicly available data, you can just have these algorithms, the AI, do all this work now, rather than junior associates. So now, how are they going to work their way up to the ladder? Do we even need junior lawyers anymore? So it's going to have an interesting impact on white-collar workers. It already is, and a lot sooner, actually, than it's going to have an impact on blue-collar workers. It's a lot more difficult to create something with limbs and, three degrees of movement than it is just some bot that can read the internet, gain intelligence, and spit out the same thing that you can.
Yeah. Antonio says art and music was the last industry we thought AI would attack, but here we are. Yeah, I thought it was production art, sure, but creative stuff.
I've heard some fun songs created by AI.
Right. Yeah.
Yeah,
In the style of,
yeah,
yeah, it's so cool.
So while we're on the topic of AI, I use ChatGPT very, very heavily every single day, multiple times a day. But while I have you guys online, what AI do you currently use to create copyright, to create ads, to help hone in on your business letters? What's new? What's out there? Because ChatGPT is all I got right now.
Yeah. I've got a couple of comments.
Yeah, I don't use it all that often. I'm creating more content than I do currently. But for me, it's just, I'll give it an idea. Like, hey, here's an investment opportunity. Put it in the tone appealing to whatever, like software engineers. And so I'll have it help with copywriting and stuff. Or if I need to do a quick search, and when I'm writing my ebooks, for example, just the history of housing and affordability in the U.S., or even like why are syndications only become a big thing in the last decade? Like what's changed from a regulatory perspective? It's able to spit out things about Reg D and like 56B, 56C, all that stuff. Yeah. So it rather than me having to go through articles and click different links, it helps me, just gives me the information that I need rather than for me to have to go look for it. So that's another use case of copywriting.
Which, to your point, Keshav, if I would be very interested in seeing your ebook, and
yeah, me too.
The second point of this is I'm creating a lot of lead magnets utilizing ChatGPT for, I'm thinking about doing ebooks as well. And is that something that we have to worry about, copyright infringements? Because I know it was in the headlines and ChatGPT was being sued, or AI was, for again, the writer's stuff. But do we still have to fact check, or make sure we're not plagiarizing with it? I don't know.
Yeah, that's a good point.
I have no idea.
Yeah. Yeah, this is a good topic. I know. So we use ChatGPT to summarize these articles, so we don't have to read all of them. If we can't want to, we can go in. So we use it for the show. As an agent, I use it to write property descriptions, and I usually have to go in and edit, but I keep refining my directions to get it, dialed in pretty good. The other day I used it to come up with directions, just some concise directions, because in our MLS, you have to old school write out how to get there, which seems stupid, but we have to do it. So I'm like, hey, ChatGPT, can you write up directions from this highway as an example? So there's so much more I'm sure I could do.
I enjoy that. And I was thinking about it when I was using it yesterday, that this is going to help the high achievers and hurt the low productivity people. Because people who are lower productivity are going to take it at face value and never increase their skills. But people like you and I and Keshav, what we do is we actually look at the work, we adjust the work, and we learn. Like I find myself, I was actually scared. I was like, am I going to get too lazy, and am I going to forget proper grammar and stuff? But through proofreading, I started to realize that it's helping me become better, because I'm actually looking at the work. It's giving me ideas, creativity, how to write things myself for the future. So again, two sides of the coin. And I just urge everybody to really think about how you're using technology, and because it could be a very slippery slope. on the wrong side.
Yep, totally. Okay, Shov, any last comment on that?
No, I mean, I think that's all. Everything they said was great stuff, and yeah, it's uncertain times and so many different ways. Definitely with AI in the mix, and we'll just have to see how it plays out. Some people are alarmist, saying that it's going to be the end of the world, and other people think we can coexist. So, yeah,
Interesting times.
Yeah,
very, very
awesome. Well, that covers the news portion of the show for this month. I'd like to thank our sponsors, Flipbid, United States Real Estate Investor Advertising, and Universe Media Publishing. And of course, thanks to our guests, Keshav Kalur, Kevin Amosh, who had to jump off, and RJ De Leon. In that order, do you guys want to let people know how they can connect with you, if you want them to connect?
sure thing. Yeah. So my name is Keshav Kalur. Just search me up on LinkedIn. One of the few perks of having a difficult name to pronounce is that there aren't too many other people out there with the same name. So I'm dressed like a LinkedIn picture too with the suit. Happy to connect. I'm based out of New York City. And my email, if you want to reach out, keshav@clivecap.com. And go to our website, clivecap.com/alternative-asset. Clive is CLIVE. There you'll find 100-question due diligence checklist that you can use to vet operators, no matter what the asset class is that you're investing in. And also a 5-minute read about why you should be investing outside the stock market into alternative assets like real estate. And if I haven't bored you by then, there's a 20-minute read longer, like an ebook, that just goes more into depth about the benefit of alternative investments, primarily real estate, but even others like oil and gas, small businesses. And look forward to connecting. And yeah, thanks for having me on the show, James.
Heck yeah. Yeah, it was great having you on and get to meet you and understand all the things you're doing and how you think. RJ.
Yeah, so you can find me on all the socials. That's RJ De Leon. I'm on Instagram, TikTok, LinkedIn, and Facebook. The wife and I run the Chicago Multifamily Club. It's a Facebook group and a meetup.com group. You could find us on there. If you want to get a hold of Mike Glasser and the NBOA, that's the NBOA.com, Neighborhood Builders Owners Alliance. I highly recommend you get involved in local legislation and the laws that are being passed that really inhibit investors like us. James, I want to say thank you very much for having me on. James, Keshav, and Kevin, all great insights. And every time I'm involved in things like this, I myself get better. So I really appreciate the opportunity.
Heck yeah. Yeah. It's great to have you on.
And Antonio in the background.
Yeah.
Yeah.
Pulling the strings.
Yeah. Big shout out to Antonio.
He's awesome. All right. Thanks, guys. Again, I'm your host, James Brown, and I show people how they can make safe, secure returns through our pre-vetted passive investments. And again, feel free to join our private investor club so you can get those opportunity alerts that we don't advertise to the public. So go to legacywealthcollective.com and put the WW in front if you need. And all the links that we all just mentioned will be in the show notes. So again, thanks to our founder and producer, pulling the strings in the background, Antonio Holman with United States Real Estate Investor. Follow and subscribe to This Month in Real Estate Investing on YouTube at youtube.com/@UnitedStatesREI or your favorite podcast app. Audio goes out to all of those. And if you run across any interesting news, events, or have suggestions for other great guests like today, just email antonio@unitedstatesrealestateinvestor.com. And remember, when one door closes, another door opens to financial freedom. All right. Thanks, guys.